Alright, this is going to be a November 5th, second hour of Asia session recap. Nar, I'm hoping I'm pronouncing her name right, but I'm just going to kind of integrate the answer to this into the recap because I feel like there's good learning within the recap overall, and it would be good to go over the trade idea itself as well. Alright, let's start from the top. High time frame, you would have to say, objectively speaking, it's trending bullish. Obviously I have this big impulse up. I have this high here, this low. This is kind of all one high. We are beginning to range out on the high middle time frame a little bit here, which I'll get into later. But generally speaking, this is all one high. Pull back within here. Our most natural expectancy would be for that high time frame to continue, if you're only factoring in the high time frame, of course. If you zoom out and you factor in more of like the higher time frame, bearish trending range, and the fact that the high middle time frame is ranging here, that's where I believe sells do become feasible if we get a reaction up top. Alright, so this is what I would consider roughly the high middle time frame, kind of the last 12 hours or so. Obviously a range, near the bottom of that range. Middle time frame, would consider it bearish at the time, but low middle time frame, range bound, and near a really rich area of interest and kind of a natural area of adherence with the overall high time frame. So yeah, I'm not really gonna go over my own trades or my own trade this session, but I do have the execution for that posted previous video as well as the analysis. I'm not going over that, but I do want to get into this. So just to keep it brief, my game plan going into this session, we were right here, so hoping for a drive down, a sweep of this low to create that bottom hourly wick, and I was hoping we were going to touch up on this area of interest. It sounds super hindsight now that I'm saying it, but you can watch the game plan if you want. So that was plan A, was buys off of here. Obviously wasn't going to trade like through this move. I was just looking to fill that immediate push to the downside because I did want to also have respect for this middle time frame bearish trend, as well as the fact that we did assume a high middle time frame range after coming into a natural area of adherence with the high time frame. So I wanted to have respect for that, although of course when you're looking at the high time frame you kind of expect it to continue bullish from here on out. Anyway, that was plan A. Now plan B was if we do happen to open and push bullish, if we kind of pushed into like this area right here, I was open to potentially taking a quick sell. Now, why would I be selling kind of midway through the expected trajectory of a bullish trending range? So that's where the high middle time frame range comes into play. Typically when a lower time frames context ends or there's a shift, then I'm looking for a misalignment or an overextension into the next external structure. So here, right, middle time frame pushing bearish, but then it kind of ends. So at that point it's ending and it's in a logical area of adherence with the high time frame. I see the middle time frame as like I don't want to trade with it here anymore unless we overextend into the next external structure, which would be the high middle time frame range, which would be kind of near these highs. So unless we overextended into this area, I was not looking to take sells. All right, so now let's get into your trade in particular. I think it was decent. There were some pros to it. There were some things I didn't like. It was just a little bit unnatural, market structure wise. It's the main thing that I didn't like about it. If we had opened here, kind of immediately overextended into this area, I think that would have been higher probability, like a higher probability sequence, given the high middle time frame range. But where we opened for the second hour of Asia, we already drove bearish and took this natural area, took this rich area of interest, and then broke the middle time frame trend. I probably only would have been looking for like a stronger overextension into the top of the high middle time frame range so that we'd have more room to move. Or of course, if we overextend and get this like low middle time frame progressive shift, and you could take like a more fractal entry where you get like a maybe like low middle time frame, like hour and a half type 3, and then you get like a shift with, shift within that shift, blah blah blah. Either that or the overextension would have been nice. This, I still think it was a decent entry though, man. Especially low time frame wise, low time frame wise, if you had have entered off of here. But at the end of the day, low time frame does matter most, in my opinion, right? We're trading the next few minutes of price action, so if you can get a quick low time frame scalp with favorable RR, right, there isn't a ton of room to move here, which is why you like to factor in some of the higher time frames. But there's a decent amount of room here where you could have edged out a quick scalp for sure, and it would have made sense low time frame wise, and candle behavior wise as well. So what did I like about this entry? Yeah, lower time frames. I also really liked the DXY low time frame wise. Low time frame wise, we were quite overextended, and we were seeing some buying volume come in. So yeah, really nice synchronous action with gold's low time frame. So yeah, definitely had that going for you. Definitely had the 15-minute candle behavior, right? 10:30 opens up, immediately drives bullish, little overextension. Hourly candle behavior, pretty natural as well, pretty much immediately drives bullish. So candle behavior wise, low time frame wise, DXY wise, looks like a good trade. The reason I didn't like it was just I do like it, but the cons to it, in my opinion, were just the overall natural high time frame movement. It's not quite overextended as much as you'd like. It also kind of goes against our natural current, as I said, right? We already came down, we got this strong buying reaction up. You kind of expect the high time frame to continue, but overall decent. As for your questions, I'm guessing you won't mind me showing this. So you entered kind of right in here. If I'm being honest, the entry itself, I think there's definitely room for improvement. Ideally with a high-low, it's all one candle. You have this you do have this high volume candle sequence here. There isn't too much room to move, but you do have it. Ideally, this is all one bearish candle, and it immediately breaks that low. Right here, I mean, it's taking 2 minutes of bearish price action to cover 1 minute of bullish price action, and given how we've been moving through here, it really wouldn't be like that abnormal for us to just blow through this and continue, right? There's really no volume shift. I wonder if there'd be a second shift here. I haven't checked, or like a tick shift. It doesn't really look like it to me, but there would certainly be one here, and that's why I think if you're in an area that you would like to take a trade off of, which relatively overextended, and we do have the DXY, we do have the natural expectancy of the candle to pull back a little bit midway through. So, overall decent time to take a trade, but the immediate volume isn't there. I would just wait and see if we get a reaction to this extremity. Now, if this had been like a really clean direct break, I'd be more inclined to enter right away. In this particular situation, probably not, just given we don't have that much room to move, and it's against the natural kind of current of the market. So it's just kind of, it's intuition that you can develop. You can absolutely begin to consistently pick out when to wait for a potential reaction up top as to when to jump in right away. It's hard to fully articulate that intuition because there are just so many different circumstances that, like, to cover them all off verbally just almost doesn't really make sense. You kind of just will develop an intuition for it, but I think this is something you will be able to consistently pick out. Right, this is a really clean shift here. Takes the high and then drives bearish with greater strength than the push-up. Immediately breaks these lows. I think that would have been a decent entry given the little imbalance we have here. Now, are there some nuanced situations where a good entry could happen to assume this low time frame character? Absolutely. And this is getting into more intuition, but maybe we're super extended against our overall direction, and we're at an area of interest. Everything else is aligning, and maybe within here we do get like a really snappy tick shift or a volume shift or a seconds shift, and you have this really high RR expectancy for the trade, where you have this massive imbalance that's against our the market's current, that's against it, right? Not with it, like this one is. And you have the expectancy that we're really going to continue. In this circumstance here, relative to the low time frame, as I said, yeah, we're overextended. But relative to the high middle time frame, relative to the high time frame, we're not overextended. We're simply moving as expected, right? We touch up. I feel like I've said the same thing 10 times, but right, we kind of touch up at a natural area of adherence with the high time frame, and begin adhering to it. Naturally, our next expected move would be like an overall continuation of the upside. So when you factor all that in, it just really lowers the probability of taking something like this. Yeah, ideally there are just way more factors that are coming into play. If you are entering off of this in isolation, probably not the best model to just fire off of. And yeah, as for this, really quick, as I said, I think it's decent, but it's definitely one of those entries where you can be well aware of the cons. You know, you're aware that you're really trading against the natural flow of the market and the overall direction, and if your stop loss gets blown through, it's like, you know, you kind of just have to expect that almost. Like, you shouldn't be surprised whatsoever. Not much to diagnose there. You weighed the pros, you weighed the cons. The cons came out on top in that situation, and it just is what it is. But yeah, I think that would have been a decent entry. And yeah, that's pretty much the session. Let's see if I will be trading. Whoa, shit, maybe I will be trading New York. Wow. Yeah, maybe I will. I'm gonna hop off now, and we'll see.